What's up, guys? How's everybody doing? Get started in a second. Good morning, good afternoon, good evening, wherever you are. Give everyone a second. It is 10 after 10 Eastern Standard Time, New York Open. Shortly after the New York Open. We'll get started in a minute. I just want to make sure that give people time to settle in, pour themselves a drink, grab a snack. I don't judge. That drink can be water, that drink can be scotch. How's it sound? Just give me a quick sound check and we'll get it started. Sound check meaning background noise and the volume of my voice. They obviously have to work together. So one of you says perfect. I need a little bit more of a consensus. Sound is perfect. Cool. All right. How's everybody doing? It is Wednesday. Yesterday was the CPI day. Boy, that was fun. Before we get started, welcome to the new channel. So this channel is gaining a little bit of traction. Those of you who've been following me for some time know that I also am part of Block Roots. So that is another YouTube channel that myself and my partner Josh Rager run. But my plan was to create a new channel and to do more vlogging, more mixed content. Haven't really got into the vlogging part yet, but I will get there. If you've been following me on Twitter long enough, you know that I'm someone who's been doxxed for a long time. I've, shared more than just trading stuff, shared my life, introduced you guys to my horses, my animals, my family. I don't know, it just feels normal. Anyway, if you're not a subscriber, please hit the subscribe button. I don't know what was going to come out of my mouth. Hit the subscribe button and hit the like button because, yeah, I'm doing this ideally to grow the channel. I don't want to just talk to myself. The more, the better. As a reminder, none of what I say is financial advice. So all this color that I provide, that's it. It's just my opinion. I don't want you to go out and trade based on what I am doing and what I am trading specifically. This especially applies to things that, for example, CPI, non-farm payroll, FOMC. I've been trading these events for the last year the same exact way, each event. And I say the last year, but really it's back until March, when these events really took a hold, when they became really significant for crypto, just as they are in legacy. These are events that I traded in legacy for years. When I was trading equity index futures, non-farm payroll was always a big day. People in crypto never had to deal with any of this shit until recently, because now we are very correlated. And I don't want to just say, we're just very correlated to the macro now. These markets are just very correlated now. Okay, I don't think we're gonna really see anytime soon that correlation break in a very significant way. So crypto trades like Risk does. Crypto trades like a tech stock does. So it's just beta to the S&P, beta to equity index futures, excuse me. You'll see me chart equity index futures, but beta to the benchmarks in the stock market, and that's going to be the Nasdaq, the S&P, the Russell, and so forth. Anyway, so this style of trading is not for everybody. Someone messaged me yesterday on Twitter and was like, I got something along the lines of got his ass handed to him, and yeah, it's not. I don't want anyone to come onto this channel and just start doing exactly what I'm doing. So I think I've made that pretty clear. Okay. So I'm going to cover CPI. I'm going to cover yesterday's session. I was supposed to record yesterday's session and I didn't. I don't know. Sometimes I hit the record button on Streamlabs and it lights up right away and it records, and sometimes it's finicky. And for some reason yesterday, it didn't start recording until not halfway through the trading, but after the first initial trades were placed. So I have my journal open and I'll go over those trades anyway, but the idea was to do exactly what I did last time and record the session. And it's not like, you know, listen, I'm not saying like, oh, I didn't record the trading session, I didn't capture the entire session because I took a loss. Like I told you guys, I got my teeth kicked in on the first trade. It was not that bad, but it was a surprise nevertheless. I didn't see it coming, and now it makes sense in hindsight that there's a significant probability of that occurring. But we'll get into that. So we're looking at everything right now: BTC, ETH, S&P. Again, equity index futures. Looking at the ES. CL, right? Crude oil, NASDAQ futures. You'll hear me be kind of repetitive with saying equity index futures. All I'm talking about is the S&P, but I know that there's a lot of new people that follow me, and sometimes I kind of blow through things expecting that everyone kind of understands. One, trading is very jargon rich, but two, that everyone understands the instruments and how they relate. So the ES is just the S&P E-mini futures, right? So when I say equity index futures, I'm talking about the ES, and it's just because I'm charting the ES, I'm not charting the SPX. If I'm charting the SPX, it's going to be full of gaps. The ES gives me the overnights. It gives me everything beyond the cash session. It's a futures instrument, right? So it closes on Friday evening and then reopens on Sunday, something that we're more accustomed to trading crypto, which is around the clock. All right, so let's just go over yesterday real quick. So I have a couple things open. Now, for CPI, for non-farm payroll, for FOMC, my trading has been identical for each event. I haven't really cared about the actual release. So the way I think of it is it's important. It's important maybe for the session that follows, but there's nothing that I have that is going to disseminate that information, process that information, and then relay it to me faster than the actual market. So for me, take the CPI, for example, my idea for these events has been that BTC significantly, and it's not significant in that it's like this long lag, but it's significant in that you could actually take advantage of it. It's an inefficiency that it lags the S&P just enough. Okay. Barely by a hair. We're talking like sub 1 second difference, far below that. And even then, taking advantage of this trade implies you're going to dump into a book that's emptier, that you're going to be chasing something that's already moving. But the point is, it's a trade that has been exploitable. So for me, leading into CPI, I was like, okay, I'm not really concerned with the actual print. I mean, I'll look at it after the initial trade, but I'm really just looking to get a jump on the first directional move. Because with these events, CPI, non-farm payroll, FOMC, more importantly, FOMC and CPI, it hasn't really been the case where you have a move right off of the starting line. So this is a 3-minute chart, but we'll go to the minute chart. 8:30 and 1 millisecond after, right? It hasn't been the case that if the market moves up or if the market moves down, that it's going to reverse in the short term. Usually the first move leads to some kind of extension. So by that, I mean, here's the first candle this is the first 1 minute candle. Let me just put on a different profile. So initially the market jumped up. Almost every other time when this has happened, this has been a predictable move in that we're at least covering 1 basis point, more than likely 100 basis points, more than likely 200 to 300. So we're more, on average, these moves extend in the very short term to at least 2.5%. So if the move is 50 basis points up, less than a percent up, I'm willing to chase that, mark it in, because I know that there's more meat on that bone to capture. After that, the whole idea is, one of the things that I've said frequently is that the first move is fake and the second move is the true move. So you get the first move and, first directional move. Okay. Let's say in this case up. The second one is a little bit more, timing is more involved, and we're looking to fade this initial move with something that has a lot more follow through. And this is because, leading into this, you have people that are playing in anticipation of one side, the initial break. And then after that, you have a cluster of stops. You have, invalidations that are based on price just moving up. So this whipsaws pretty violently. Instead, yesterday we got an initial spike up that I think this covered like, 1/3%. And then this thing was down before you could, this was down almost immediately, a couple hundred points. So I ended up scratching this almost immediately, right? I remember seeing, because I'm not even looking at Bitcoin's chart. I'm looking at the S&P. I'm looking at the ES. And I see it burp up. And I also see my P&L on the DOM that I'm using. And it's blinking. And it's blinking like massive amounts in the green, in the red. And right away, I know that there's something wrong. I know that I have to scratch the trade, because right away in this trade, I should see that I'm basically in a split second, you'll see, and this is just muscle memory of watching this so frequently. I will see my fee, which is red, and then immediately my trade will be in the green. So the fact that it is jumping up and down, and I just was able to pick up on that, right? It's something that my brain is processing way faster than I could, articulate it. Meant something was wrong. So I scratched the trade, and I shared this. This was the first trade yesterday. This is my buy at 22,738, and I scratched at, it turns out, about 90 points below. Now, that is not a bad exit, honestly. Like, if you look at how much the market moved, and this is a 1 minute candle, but if you had this on second candles, it'd be a pain in the ass for me to scroll back now and look at 1 second candles on TradingView. But I mean, there is no volume in this thing whatsoever. It's just completely air pockets. And you could see where the air pocket occurs, where this gap occurs. It's kind of where you would expect it to occur, below the structural low leading up to it. Like, there's a bunch of stops there. The liquidity is going to be yanked in anticipation of a whipsaw. Market makers are not going to be quoting as tight, or quoting really at all. This is a very toxic move. So I ended up getting out, $90 below my entry, but this is what I ended up getting out into, right? So that was a pretty big kick in the teeth. So 90 points out, quotes, air quotes, exit. But the reality is, if we look at where this occurred on the footprint, 22,648, this is the exit price. And we'll look at that just on the book. I mean, you'll see, this is, what was the exit again? 648. We're looking at right between here, and there's no volume in here. Now my volume ends up fitting within this level. And again, when I'm trading CPI, the initial move that I put on is going to be less than, what my normal position size would be. And that's because, one, I'm chasing a move that, the conditions are a little bit more, unaccommodative of any kind of larger position sizing. It's thin, right? So this thing nukes all the way down. And I ended up just trading in the direction of this flow after. But it was a surprise. If anyone's asking about this journal right here, this is EdgeWonk. The pain in the butt about EdgeWonk is you have to manually enter your trades. So what I do with EdgeWonk is I actually use CoinMarketMan. That records everything through API, and then I plug in all those trades after. But one thing I didn't realize is I was entering in a couple trades initially, and it picks the date for you, like if it's today, but then you got to set the time. So I'm not getting everything out of this in terms of like time of day, because half of them I didn't even bother putting time of day. I just was entering the trades after they were pulled through API, manually entering them. But you get a ton of feedback from this, just in case anyone was wondering what this tool was. So looking back at CPI, I mean, this kind of, I hate to say it because it's hindsight, but this kind of makes sense. And I had posted something to the effect of, and we'll go back to that post. I know I shared it on a chart like a dickhead yesterday. In either direction, I always get a little worried when the market pulls in the people that were staunchly against the trend to begin with. So you have to admit that for the last few days, throughout the duration of this grind up, it was a pretty one-sided consensus. I mean, it was consensus that the market was just going to go higher, right? And I was playing the long side as well. I was anticipating a higher move as well. But the point is, there was like, as far as you could see, I mean, everybody I knew was anticipating a move higher. Like, it was taken for granted. That's my point. And I don't want to be a jerk, but I've been following some people for a long time that they might be great traders, but I do know that when they flip, there's some cases where they're like the last to flip, and it's kind of like the canary in the coal mine. Like, no hate against them. Like, I'm sure they trade really well outside of what I'm using them for, but it's just like a mental note. I just think, okay, now, XYZ person is bullish, and they're great on the short side of things. They're bullish now, and the move is already extended. Point is, there was a ton of people already in this, and I hate the trouble with like describing this is like it's a qualitative thing, right? I mean, if you look at open interest, you could see that. Let me just back out. I gotta reset this. Actually, we just go to Binance. If we look at open interest leading up to this move, there was quite a substantial increase, I think to the tune of like 1.5 billion from this level right here. Okay. So I have alerts set just in case we run into any levels. So from right here, right, market looks like it's possibly going to reverse. Okay, is a significant snapback from a supply zone. Okay, market completely engulfs that structure, and then it looks like we just bring in a ton of open interest after that, right? If we're looking at, this is specifically Binance, if we look at aggregated, it's basically the same story. It's a ton of positioning, and this positioning it's not like it was one-sided in the sense that it was just shorts opening in the face of a trend that continued to grind upward. There was a lot of longs that were opening, and you could see this just by looking at basis. You could see this by looking at things like predicted funding. It was a mix, but I mean, going into a CPI, you have to admit that almost everybody, and this is like no bullshit. I was thinking this as well, that there would be an improvement in CPI. So I was in that same boat. So I'm not like speaking in hindsight, like, oh, all these, fucking idiots. I can't believe they thought this way. I was one of the herd, right? Now, remaining long into that, or longing into that, is not a rule that I will ever break, right? I was still treating this like its own independent trade. But there was really no sign of like hedging into this. There was no sign of caution. So the market was set up in a way to be really, it was really imbalanced, right? I guess that's the best way to put it. The market was really imbalanced in anticipation that the move upward was a given. Like, oh wow, we already had this move, and now it's just like kick back, and we're back on easy street. And clearly that's what results in moves like this, when all you have to do is push the market in the opposite direction to get the dominoes going. And the structure preceding this, so this is just the last little bit I'm covering on CPI. after you have a move like this, okay, this is a technical move, right? OI is beginning to flush, and then you also have a bad macro print. It makes sense to go in the direction of this flow. So the entire morning after that, and it's not like, I didn't take a ton of trades. Like I said, I had a great trading day yesterday. I took 1, 2, 3, 4, 5. I think I might have taken 6 trades altogether, and I don't know if I added in the last one. I have to check CoinMarketMan. But it's not like I took I wasn't taking 20 different scalps. But after this initial move, after that, kick in the teeth, I was just going in the direction of the flow because we didn't really have the most attractive structure to fall into. Right? This was a grind up, and this is kind of like the saying, elevator, stairs up, elevator down. And if you look at stairs, it kind of makes sense. Anytime you have a structure that consists of just marginally higher lows, like, we could look at this on like the hourly, right? 1, 2, 3, 4, 5, 6, 7. Just looking at the hourly and this grind up, 7 higher lows that were uninterrupted, right? 7 marginally higher lows. And this is just me kind of quickly eyeballing the fact that, again, all these are very in close proximity to one another. So, you place a stop here, he places a stop there, they got stops down here, there's further invalidations down here. There's really not much to stand in the way of this entire thing being wiped. So it becomes a matter of, well, are we at the end of this yet, right? So we're into this initial move. I'm looking at this big down move. There might be some people thinking that this is a good mean version opportunity, but this is on a poor print in CPI. And I'm looking at this thinking, all right, so not necessarily the best invalidation from a technical standpoint. So if we go back up here, we're testing the second, standard deviation band of VWAP. So it's not necessarily like the best area to get involved on the short side, like if you already have a really strong move. But this is value being established lower. This is us holding value. And I'm comforted knowing that 99 times out of 100, now we're just going to take all these lows. So as, it doesn't sound safe because, again, if I am entering in short right here, you're thinking, all right, where's your structural invalidation? It's like all the way back up here. It's not, this is kind of untested positioning as I've gotten into previously, meaning if we come back in this direction, there's not really a whole lot of, there's not a whole lot of anything that stands in the way of us just recovering this. But I just, leaned on, I hate to say intuition, but that's just experience, on the assumption that no matter what, even though we're down here already, right? And this, you might say this is support after this kind of reversal, and you have this daily that has engulfed the, 3 days prior. So that is the low. That's the open of the 3 days from that grind. Until we take out these lows, it just makes sense to continue to trade in the direction of that and just have tight invalidation. So if you get some kind of throwback, right? If you have any kind of throwback, short it and have a really tight invalidation. And if you look at my trades, like these are not, by any means, these are not substantial moves. We have, a 50, 100, 120, 100, and then $300 move. All right, so enough covering the CPI, because anyway, the point was that it was just very crowded, obviously. Like we all learned that because it only took a small move. I mean, that initial jump was 1%, right? So it was a sharp move, but nothing stood in the way from it. Nothing stood in the way of it, especially in equities, which had their worst down day in over a year. So that brings us to where we are right now. Sorry for that long-winded explanation, but you guys know who I am at this point. So as far as bias goes, we have a high time frame engulfing move, right? So BTC specifically, high time frame engulfing move, engulfing the 3 days prior into what technically would be support, right? So normally you would want to see, if you have a structure like this, so if we have this kind of under over, normally you would want to see that the top side of this structure holds. So instead, if this was prior value, we found our way into that prior value area. We haven't exactly explored the lower side of that structure, but it's if you're a bull, like, this is not a very compelling long where it is right now, right? I was looking for certain stats, and I was posting about them yesterday, because yesterday was one of the worst moves that we've had in years in equities, one of the worst single day moves. So what I want to know is not really what happens in the week after or the month after. What I want to know is what happens in the day that follows. What is more likely to happen? Now, I already have a bias that is down at this point, because just after that print, like, it's clear that the market was a little bit too excited, myself included. So I have a technical reason to be more bearish. But in the short term, I want to know, considering the correlation is this strong, after a move like this in equities, historically, what has occurred in the day that's followed? The problem is, like, if you look at this, so this is the 4% plus drop since 2020. This was an incredible bull market, all of this. So, you have a 4% drop, 7%, nearly 5, nearly, 9.5. That's the COVID lows. Most of the performance after, majority of it was positive, but the context of this is completely different than where we are now. This is a little bit more, this is a little bit better of a read on these kind of moves. And as this post says, right, this isn't the, financial crisis or pandemic, but the conditional probability of more of these moves is much higher now than it was before today. So after a big move, we have this kind of clustering where we expect continuation in the short term, right? We expect more volatility, more downside volatility in the short term. Normally with Bitcoin alone, right, if this move occurred in isolation, the same way that this did, it wasn't necessarily in isolation because equities were supportive. But I said after this 10% move, in the short term, you could always expect continuation. So in the 1 to 2 days that follow, this immediately just made my bias long. So this is a very significant move to the downside, basically the same extent. On its own, we would always consider that this would lead to a further drop. But I'm just mindful of the correlation with equities, and that if equities are, more likely to mean revert, and I'm getting back to my point I was trying to make, if equities are more likely to mean revert, would crypto move down on its own, or would it more likely mean revert with equities because of the correlation? So again, just trying to really build a strong case for some kind of bias. But this was last night, obviously, before any kind of flow came in this morning. So I have some levels on my chart that you could see probably pretty clearly in yellow. And these are just alerts for where I would want to get involved. I mean, this was a really gappy move. So poor structure leading up to it, slightly higher lows, decent low right here, but it's within value the prior day. So it's not like it was a decent low that was made probing a prior low, right, to show demand. This is a poor low. And then we have this big gap down. And now we're left with this kind of structure that is, it's more of a double distribution in the making. If you look at 2 days compressed into one. So, value up here, high conviction move down, and then establishing value at the low. So again, a double distribution, something like that, right? Big imbalance separating 2 periods of brief establishment of value, right? Brief balance. So we're not in an area right now where I would look to open up a trade. I am more biased at this point that we end up tapping the lows again. If we are unable to find support, at these lows, right? If we're unable to find support, it's kind of like above the midpoint of this range now because we're within it, then I think that we're just revisiting this low, right? I think that, again, this kind of goes back to my original thesis, which is that we have a low tick in Q4, but it looked good briefly, right? Just zoom in real quick. Okay, so those alerts that you see set, I have one alert set at yesterday's volume point of control, and it's kind of at this weird little anomaly within the structure. That is right along the area where single prints extreme is. So the single prints are right around 20,600. My alert is set right around there. And then I have another alert at 20K. So we're balanced right now, right? This is as close as it gets to a Gaussian distribution. A little bit more lopsided. We have a ledge over here, but I think that there's a continuation play to the lows, so a brief scalp if we test this 20K region again, or possibly looking for signs of rejection or acceptance around this 20,600, 20,700 level, right? Because this is kind of like we haven't completely closed out this single print gap. So the gap from yesterday, we're kind of just filling that out right now. So if we extend kind of like this low volume region forward, like we've spent a brief amount of time in it. We have a decent high up there. We have a poor low so far. So we haven't completely filled this out. That being said, if we do come up to this level, I will look for possibly a good entry for continuation down. Right, this would be the area where I would expect that. All right, so now we have, we're approaching the point of control, yesterday's volume point of control. We've covered the gap. This is where it kind of has to happen for bulls. Otherwise, this entire region up here is where you would expect that to be cut off, right? If this was to resume moving down. And the point of that is that if we do, let's say, we come up to this 20,000. I have my alert set before there because obviously I don't want to know when it's at the level. I want to know when it's approaching it. If we do start accepting above, and ETH is a little bit cleaner in the sense, if we start accepting above this region, there's not really a whole lot, again, in that move down. The single prints might be all the way up here, but this entire structure is, it's not really something that you would expect to be too sticky. So if we came up to 20,800 and we didn't have some kind of absorption or failure, then you're looking at a move that probably would happen pretty fast between 21 and, like 22. And then maybe that ends up forming some kind of lower high in this region. But the point is there's not a whole lot that stands in the way of that once we get above that level. So once we get above into this region. I mean, you had brief periods of structure established in that little spot, but it's for all intents and purposes, it's kind of a gap. Like you might expect price to slow down a little bit between like 21,000, 21,002. But I think if the market is all the way back up here, you're likely to squeeze into, some kind of higher extreme around 22, the underside of this structure, back up to kind of near the origin of the move. So ETH is, I think, obviously it's performing better than BTC. It's a little bit cleaner than BTC. The distribution from yesterday is an actual, sort of textbook double distribution. So two regions of value separated by single prints. After a strong move like yesterday, after a double distribution, usually you're going to have some kind of balance established the day prior. Absent any kind of major catalyst, market in motion, it's not usually the case that a double distribution is going to lead to continuation in the short term and overextension. Like you wouldn't normally see a double distribution and then another trend day or another double distribution, unless, again, there's a few cases where it's a little bit more catalyst driven. But I think the markets have obviously responded to CPI print and clearly shown they've found some kind of footing in the time after. But with ETH's cutoff is right around 1637. So into that single print gap. What I mean with that is that one, I do have an alert set right around 1610. So if you look at the last 2 days, right, where value is being established, this is kind of a clean area to possibly expect continuation up to this gap. So if we see, for example, like us, able to recover, and I have an alert right around 1615, if we're able to hold this structure, right, I just think it's a quick scalp from like 1615 to 1635, because I think it's more likely that you test, if we're going to continue to push, hold VWAP, hold the top side of value, reclaim this little consolidation, I think you do get a squeeze up to 1635, 1637, whatever I just said. That is the area where you would look for like the best risk reward for shorts, just because this is where it should get cut off. This is kind of the inefficiency within yesterday's structure. This is an area where if you accept it within, this is unchallenged positioning, it would move pretty quickly. So this is a make or break spot right around 1635. So those singles, if we show signs of acceptance in that region, so this is something you monitor on the low time frames. If we see that we come above this level and we see that it's sold and hold, like if we look at it and we see something to the extent of just want to find a good example that would show up. Not the best example, but if we have something where we're looking at on the very low time frames, market consolidates briefly above it, and then we have a couple candles, pretty heavy selling, but the market is able to reclaim that level. I was just looking for something structural and that might give a little bit of a color with the footprint. That should be that could be a very brief retest before that stronger extension. So 1635, looking at it on maybe could be even a 1 to 3 minute chart. If this ends up getting sold and it holds, right, market maybe even looks something like this, briefly consolidates, starts flagging in there, then just expect this to extend from 1635 to 1670. So this is, again, this is a good area to define risk in both directions. Now, I think you have to be a little bit more responsive on the long side, whereas failure above here, so some kind of failed acceptance and then backside retest, probably be a little bit more, I guess, slower moving. And after you have that kind of failure, you could place stops into that region under the assumption that, all right, so if we're failing below these single prints and now we're accepting back below, into this little range, that if we're back above here, I want to get out of the trade anyway, because maybe this is just one longer sold and hold retest before continuation up. Now, I did want to give a good example because I just scrolled back into the footprint and didn't find something that was that attractive. But there was something, I think it might have been around here. There's an example of this in BTC just recently where we didn't get really any time before this ripped up. It was actually right here. So if you remember the last stream I did, talked about this value area, and 19.7 it was. I think it was 19.7 or 19.6. The point was accepting back within here would mean that you could pretty much take for granted a move from here to here. And I had said we're probably going to overextend and come up to around 20,800. Well, we got a bigger move than that. But you didn't really have much time to decide what was acceptance, right? acceptance, if the market spends a lot of time in an area, you could say that there's a time-based acceptance. But that obviously, a lot of times you might be hopping on things that have lost momentum. You might be getting on things that there's a lot more discretion to be applied, and you could start to overthink things when they don't happen very quickly. But if we look at this on the low time frame, just go back to that right around 19,000. Scroll back, and I'll show you there wasn't really any pause. It was just a flag. So here it is. So this is, let me just scroll to get to the right position so you guys get the best out of this. Here's the underside of that composite. Here is a big move through the level. So strong move, right? Strong move above prior day's highs into the level. This is towards the exterior of value. And then look, you don't really have much of any time to wait for it. It doesn't come back and retest the level. It's a strong move from the beginning. You kind of just have to get in on the first case of the market selling and holding, right? If you look at this on like the 1 minute, where you might really time an entry. I was drawing the flag on the footprint chart earlier. This is kind of what you have, right? And that is the case of it, again, selling, but still able to hold higher. And that's all you get, right? And then the market very quickly moved from that little retest all the way up to the other side of value. So you didn't have any time to really, the trade was done. This is the kind of thing where if you're like a hindsight warrior, you could just kind of pat yourself on the back all day because look, it worked out. But the reality is, like, out of anyone who traded that, how many people actually got involved in a timely manner to be able to take advantage of it? So that's sold and hold. We could probably look back at it right now. It's right there. So this is a 5-minute chart. Let's go to a 1 minute because this was so fast. And I'm just trying to give you examples of what to look for, by the way. My intention is not to go over something that happened a couple days ago. But the point is to show you what to look for. So this is a delta profile. So you can see we have selling coming in the first pullback, selling coming in again. And the point is, each one of these periods of selling is followed by higher prices. So some of you might look at the bid ask. I like to look at the delta ladder. So when I say sold and hold, imagine that the market is consolidating after making a big move up. And you have multiple periods of candles. And then you have something that is a strong move by sellers. And then you see maybe it's you're looking at the delta profile, or you're looking at the delta cluster, or whether you're looking at like the bid ask structure, and you see that this was sold and then holds, right? So trap some sellers, didn't lead to any kind of sustained move. So the strength is on part of buyers right there. And this is just something that's useful for anytime that you're approaching a gap. You're more than likely not going to have a lot of time to decide whether the trade is on or off. Like, if you accept into a gap, there's no reason why, or accept into prior value, especially in gaps. So there's no reason why this level should act as resistance anywhere within here. So it's either going to be here or it's going to be here. Okay. The point is that this was, again, unchallenged positioning. You know, I was part of that, right? So I was trading yesterday, I was trading BTC, but I was part of the unchallenged positioning on the way down because, again, there was no, I was not placing, you know, a hard stop or a stop based on anything up here. I was placing a stop within this structure, and my invalidation was just going to be to get out if price moved against me at all. So if you have a structure that's left behind like this, you can imagine that we still have a good amount of positioning that's open that, you know, whose origin is right back within here. And there's no reason for them to hold this at all if it starts reapproaching their entry point. So when you do reapproach that unchallenged sort of gap region, that covering leads to very sharp moves back in the opposite direction. This makes sense? I've gone over this concept a few times. So with ETH, just to go over some of my alerts that I have set here. One, I think everything right now is contingent on equities. So there's been some very big rebounds after days like this. So far, I mean, it's not really that significant. I mean, if we look at, this is the daily chart. Retesting that support zone. This is a level that has to hold at this point. If we lose this low in equities, and again, just charting the E-mini futures contract, if we lose this 39 region, this was, don't forget, this region was a prior value area high for this entire composite down here. So just extending that line forward. So the chances are that if we lose this level, that we come back down to that 37.5, 37.6 region over time, right? Prior range composite, point of control down there. This is a very technical market right now. Like, I know it's fundamentals and it's, you know, macro catalysts, very event driven, but it's very technical. If that happens, there's no way that BTC and ETH are holding up. Like, I don't care what anybody says, that the correlation is still there. I'd mentioned in the last two streams, I'd said this very specifically. On the low time frames, it looks like there are brief periods where the correlation abates a little bit, right? Where price has idiosyncratic behavior, where it can kind of do its own thing. But that's very brief. I stressed multiple times. It's very brief. The larger moves are correlated. So when we're at one of those very significant levels for stocks, you best believe that if we lose this level, that the correlation is 100 again. There's one, right? As positive as it gets. If the S&P drops 10%, you know what that means for Bitcoin and ETH. So with ETH, just to go over some of these alerts again, my alert to the downside, just to give you an example of what I'm looking at. So ETH is, one sec, just zoom in. So this alert right here is at 1579. Now, I didn't set the alerts at the exact level because, again, if they hit the alert and I have to go to it after that, chances are I'm not going to be able to be part of that trade. But just looking at where right now for the last 2 days, where we're spending the most time, and this level is kind of a little ledge right here. You have a P-shaped profile, so something like this. So this is, you know, this is if you old school TPO, this is like your short covering profile. Swift move off of the lows and then establishing value higher. I think that this would be an area to look. ETH is stronger than BTC right now. So for ETH, I'm not like putting an alert here and then thinking of shorting this. I think that ETH is noticeably stronger than BTC, just holding up slightly. So I would look for, again, right now we're just chopping around VWAP or at the center. It's like fair value. It doesn't make sense to get involved here. It's like you have possibly an edge at the extremes. I would look for another fade here. Like if the market comes down into this level, I would look for signs of a trap, signs of shorts getting a little overly aggressive through the level, to see us maybe rotate back up. Because I think the one thing that's important to note is that with BTC, there has been cases where moves like this, again, they lead to continuation in the short term in the 1 to 2 days that follow. We have a green day today, but I would never imagine that this would be the low and then done. I would imagine that you retest this level again. And again, trying to all just kind of keep in mind what's taking place in legacy with equities at the same time. I'm open to trading both directions. Like I'm not, listen, I think that high time frame still, I don't think this changes much. So that, I guess that's the overarching point or belief I have, is that this doesn't change much. My opinion is still that the market is in the process of bottoming. I've said multiple times, like retesting this level is something that I would kind of expect. So for BTC, same goes. So I'm not like overly biased about any direction in the short term. I'm just looking for the quick opportunities. Make sense? You can see we had a huge wipe in OI. I think FTX is selling this a little bit more than everybody else. You just look at funding on FTX. Bybit's different story. More selling recently. Yeah, I've given this layout out to a couple people so far. I mean, with Bitcoin, considering this back and forth we had so far right here, just locally, I do think that, and again, this is kind of different than what I said for ETH just now, but I think that I would take that breakdown short. So again, my alert is, and just looking at it, where is it on the profile? It's at today's low. Because getting back to that point I was just making, I don't think that this is a green day that's going to be followed by more green days. I think that you can expect continuation in the short term after a big move like this. Maybe it's not major extension, right? Like I said, double distribution structure. Maybe we have a couple days of balance after. But poor low, excess down here, one tap of that low. I think a breakdown below this low leads us to tap that low again. So you have like a 250 point move. So just being mindful of that. And we've already had a significant response down here. So any positioning that got involved, so if you just look at open interest up into that low, any positioning that got involved on the long side there probably pukes. So a round trip back down to that low probably gets moving pretty quickly. You know, I mean, look at the structure locally. It's like a V-shape bounce. Again, this is a low time frame chart. But just think about anyone think about how you feel when you get involved, right? You know, the market makes a strong move away from your entry, and then you're coming back to it, and you know that, you know, you have a higher up view of conditions. You know that now is maybe not the best time to marry anything. And to be very nimble. So strong move off of the low. We're approaching that low. Yeah, I'm just expecting nothing sticks for a while. Just looking at some of this questions. So the software is Edgewonk. And just to reiterate, so I was making a point earlier. The Edgewonk is the best trading journaling software there is. So I've used Edgewonk for ages, but I stopped using Edgewonk when I was focusing more on crypto, because Edgewonk doesn't connect with through APIs to crypto exchanges. So it connects through brokerage accounts, you know, it connects to legacy, but it doesn't connect to crypto. So you have to manually input all of your trades, and that's a pain in the ass, right? Because you do have trade journaling software like, again, CoinMarketMan. My buddy Cosmonaut created another one that's still in testing, where it pulls through API and you don't have to worry about anything. It, you know, compiles all your performance, shows you know what your hit rate is, what your expectancy is, you know, what day, you know, it breaks down. They have a lot of information now, like what days of the week you trade poorly, what days of the week you trade best. All right, so that's great. But Edgewonk is way more comprehensive. Now, I don't want to dox a lot of stuff, so I'm just on this journal side, but there's a ton of, it shows a bunch of really valuable information. So the trouble is, though, again, you have to manually do this. And again, you can just fucking lie to yourself if you want. Like, if you want, you could get rid of poor trades and inflate your good trades. But at the end of the day, like, again, you're just lying to yourself. So what I do is I use CoinMarketMan to get the exact, I've only done this the last few days after realizing this, to get the exact time of the trades. So you could see that, for example, I had manually entered in all my trades yesterday except one. So this is this was a trade that took place, I believe, between these trades, but I had forgot to enter it. And you can see at the time it says 00000, because I didn't put the actual entry and exit time. So you have to do all that if you want to get the most out of this, right? You can just, if you want, you know, just place your entry, place your exit, how much you gained, you know, how much you lost, what your, you know, fees were. But if you want to get the most out of this, you have to manually enter everything, which, yeah, you know, goes down to the time you entered to the time you exited. And then even then, like, if you're exiting a couple times, you know, if you're scaling out of a position, you know, you could set the high and low of the trade and then have a different exit price. So it's, again, it gets really comprehensive and complicated, what allows for a lot of complication. But it is the best software out there. But like I said, you got to do it all manually. You got to enter it in on your own. But listen, I mean, I said this in the last stream. If you can't do this, then you're not going to make it anyway. Like, if your goal is to be a trader and to succeed at doing this, but you can't record your trading and put in that boring work after, you're probably not going to make it anyway, because this is just part of the work, right? It's part of the accounting. So yesterday, I mean, there's times when I'll put it in during. When I restarted using this, I was just going through my trades at the end of the day and adding them. But see other questions. Bullish weekly candle with previous week taking lows and close high. How do you think market would react this week if we had no news at all? Let's take a look at the chart. Talking about BTC.
That's pretty good.
Yeah, I mean, listen, like I said, this was kind of consensus that this was gonna have more follow through. Like, everyone was taking it for granted. And I was looking at this, and there's a couple simple ways that you could think of things in crypto and often get rewarded. Or if you have a structure like this and you're forming a range and you have a strong move down to the range lows that holds, the reversal back in the opposite direction, it's almost always that you could take for granted that it's just going to revisit the direction it came from over time. So my bias, honestly, was, okay, I'm looking to play the long side back up to here. So you can see, I mean, immediately that is unfolded. It's an ugly weekly candle, right? We have 4 days left in it though. So I don't want to talk about the weekly candle now when, you know, we're only 2 days into it. This could finish green, right? It could finish at the low, and it might not necessarily have any bearing on the overall trend. We're ranging, right? We're ranging. So how would you know if it's a real breakdown and not a fake out? So this is where paying attention to the order flow and the low time frames is something that, one, is very nuanced. You know, I hate to again use the word intuition, but it's really just pattern recognition, and not talking about patterns as in shapes. But when we're approaching a low and it's not going to hold, so for example, let's say we're approaching this low again, price rarely ticks back. So if we're through this low and you're looking at the footprint, price rarely is able to tick back. So you'll see, for example, let's just say that, you know, this is the low. If any buyers come in, they're immediately it's almost immediately that they're underwater, and that any selling that comes into the market brings us lower almost immediately. So you just see that there's this kind of, I guess the best way to describe it is any of the selling that comes in is leading to slipperiness. Whereas if it was a fake out, or if there was, you know, traders getting caught off sides at the low, you would see very quickly that the sells that were coming in were leading to no results. Market was able to trade back above even briefly. Whereas if you have something that's going to fail a lot, you know, 9 times out of 10, in the minute or two that follows, like if it's going to get slippery, you'll see that selling just overwhelms any buying. So you might have a brief period of buying that comes in. The best thing that you could see, honestly, in my opinion, is if you have a breakdown in progress, you have, you know, move that comes through, and you get a ton of market buying, and then we just kind of engulf them right away. So you have something that, you know, very quickly on the low time frames looks like a throwback. A bunch of buying comes in. You could basically just sell this breakdown, place your invalidation above that high, and expect that they're going to get flushed out and lead to some kind of brief move. The trap, or, you know, a fake out, a lot of times you're going to see that right away. You're going to see the market speeds up into the level, slows down, sellers get caught off sides below here, and then suddenly we're able to retrade above those sells. You just want to, if sellers are in control, it should be obvious, right? If sellers are in control, you shouldn't be losing their footing immediately. So when I say that, I mean, like, all right, so imagine these are candles on the way down, and that would just be a range candle. Imagine this is a move down. The left side is going to be your bid, the right side is going to be your ask. Here's a bunch of sells coming in. Just color this in. It's terrible drawing. We should see that the selling just continues to hold as almost as resistance. So if you start seeing a bunch of selling coming in, and then the market is able to retake that level, it's not a good look, right? And then especially if you see a bunch of selling comes in, market retakes that level, and then we have, like, let's say we have another candle, a bunch of selling, and then the market is continually able to hold higher. Well, if there's selling and it's legit, it should lead to lower prices, right? Or if it's overwhelming, or if it's in control, rather. I mean, this is a good example right here. I don't know why we just didn't use this one. A lot of selling driving into the low. Okay, and then you have that initiative buying that comes in, and now price is able to hold those levels. So it almost helps if you just kind of box out your regions on lower time frame price action. So selling, 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 right? And then if you just consider this a little cluster, the market peaks up above. All right, that's fine. Sometimes you'll trap some buyers and then resume, and if you're back in that box, that's good. But if you see that you have a bunch of selling that came into the market in this region, and that you get some kind of snapback, and now you have selling coming in and it's holding slightly higher. Well, you just had a transition of where that participation came in, right? Markets are moving down, bunch of selling coming in at the lows. Now we're higher. We have a bunch of selling coming in at the lows, but now it's higher than the prior consolidation or prior little pocket of risk. So you have this sort of shift in control taking place. Right? So sold through the level, and meanwhile they get trapped through the level, and then buyers reverse it on them. And any selling that comes in has no more effect. What's up, bud? How's it going, man? So Zane, so just a little short story. I haven't used CoinMarketMan that much recently. I only started, so I started going back. I talked about this before Labor Day. I said after Labor Day, back to business, very serious again, no bullshit, starting a fresh account. Not like I needed to, right? But I just wanted to, you know, it's a phase change, kind of phase transition thing. I went over that in the last stream. And I'm starting a new Edgewonk because I'm going to take really detailed notes. I have a journal on Discord, and I'm going to make sure that I have the most detailed stats possible. So when I started using Edgewonk, I was going back to the exchange, and I was just going to the P&L history, getting the entry, getting the exit, and I wasn't using CoinMarketMan to do that. And then just recently, I thought, why don't I just use CoinMarketMan? It's going to give me the exact time. Because if you're on the exchanges, like if you're on like Bybit or Phemex, I don't think it tells you, like if you look at your trading history, this is my point. Like you're trying to like enter your trades in at the end of the day on Edgewonk, and you're looking at your trading history to do that. It won't tell you like your entry time, your exit time. It might if you go into like separate trades tab, order history tab, but then if you're using market orders, it's going to be spread out, and it's just a pain in the ass. So I've only started using CoinMarketMan again recently when I remembered that it had all that info. I haven't had any problem with it recently since I started doing that, but whenever I used it initially after their new sort of version 2 came out, I did have some problems. But I think, I don't know, I'm pretty sure those were smoothed over. It's a great platform. Like CoinMarketMan's an awesome platform. So yeah, I had a few shorts yesterday, but I didn't get a monster short. So I went over it earlier in the stream. I had small scalps. I was going over the trade after thinking like, what could I have done better? And honestly, it just was one of those things. The market was very strongly tipped in one direction. There was no time to respond. I was long, and then I was immediately underwater. And after I was immediately underwater, I was looking at the S&P. It was moving a lot more than BTC, and I didn't want to chase it at that point, thinking that I was still playing the first move, right? Because, you know, all right, so maybe this fake out was what we had, and then the first move is going to be something that has much longer follow through, and why don't you just enter in short right there, right then? I didn't want to do that because I didn't want to start if you start being hasty and doing things like that, it just, sometimes you just have to understand you missed the trade, right? So I sort of recompartmentalized, collected myself, and it took me a while to get back. I think, like, if I look at the time, my CPI trade was, my initial trade was at 8:30. My next trade was like, why is that? Is that 9:30? Like an hour later? Yeah. So I did not jump back in right away. It was very different than any other CPI. So I wasn't shorting until this low. I wasn't starting to go with the flow until this low. Yeah, it was insane. Like like I said, there's like, you just start, you get just used to seeing things in the corner of your eye, honestly. Like everything, like your desk, you become very familiar with it. You become very familiar with your environment. So when I'm trading events like this, I'm used to seeing like a color in one area of the DOM. Like I might not be looking specifically at it, but I know when it's green or red, like just through my peripheral. And I just remember, normally it'll be red right away because I'm marketing in, and I'm processing this all after the fact now, but it'll be red right away and it'll be green instantly. And I know I've caught the first trade. And yesterday was just in a matter of, it feels like a long time now, but split seconds, it was all over the place. And I just knew that something was I fucked the first trade up. So I didn't want to jump into anything right after that. Because one, I closed the trade out, to be honest. I closed the trade out and I was not even looking at my account balance or anything. And I didn't see what I closed the trade out for a loss. And the loss that I closed out was much less than where price had actually shown as a negative at one point when I saw it. So, I was thinking, oh, fuck, like the market just blew out, right? Spreads are blown out. I'm getting the fuck out of this right now. Like I'm not waiting to get out of this. Could be way worse. And I'm seeing numbers flash on my P&L, between in profit and out of profit in a matter of moments. And luckily there was, I got out before we hit that massive air pocket. But I was expecting, honestly, to look at the trade history and the actual result of that P&L and see much worse. These are VWAP standard deviation bands. This is 1.2 to 2. As far as the Discord, no, I haven't been using the Discord that I use for my journal is a private Discord that I don't give anyone access to. But Josh and I were talking about we have to reignite the Blockroots Discord because it's absolutely dead. So there's nothing right now. I mean, you can see we're just funneling. We're chopping around right around VWAP. Kind of what you would expect, honestly, right after a move like yesterday. Like everyone's a little bit cautious. Definitely wouldn't want to get involved around here. Again, though, I mean, I personally can't wrap my head around, like, I just try to keep things very simple. So for me, ETH is a sell the news thing. Maybe it's not, right? But I think it's just better for myself, for best practices moving forward, to always assume it's buy the rumor, sell the news. We've seen many times in this market where it isn't, but that's usually smaller things, like smaller alts. Major catalysts that are known well in advance, Bitcoin ETF backed, CME, those are all sell the news events. Like everyone talks about how it might be different getting up to it, and then when it happens, it topped the market twice. So the ETH merge, I don't feel like it's I had already been selling. So when I posted that initially, we were up here. So we could be at the point now where I'm starting to look for longs again, depending on what happens in the next couple of days. But to me, it's never I don't know. To me, it's always best to just assume that it's always going to be sell the news. Yeah, so as far as like my bottom thesis, I think that we're bottoming. So that's why I've always tried to stress the ing at the end of it. So when you say bottom, people think it's like the last bottom you mentioned, right? Or the last bottom where the market was. So, if we're up here and I'm talking about how I believe the market bottomed, they think this means the bottom. I just mean this, right? I think that we're bottoming. So by all means, I think that and I'm like, I posted a detailed opinion, but it's kind of like just for shits and giggles. Like to really have detailed opinions on future events is stupid. But I said, I think, market is bottoming now, but I think we're going to put the low tick in Q4. So my belief was we got something, that maybe got to Q4 and did this. And that would be, us bottoming. I don't hold it to a standard of we can't break below this low. I just think that, there's a good case to be made for markets finding a bottom. But I'm not going to hold on to that. Like, if it changes, it changes. It's just, this is a very different time, right? Like, there's some amazing stats for midterms and markets, and September's being red, and then October on being great. But this is just we've never been in this environment. So I'm playing this. I am trying to stay as nimble as possible. I'm not marrying into any beliefs. You know, strong opinions loosely held is the best way to put it. I mean, if you look at the high time frame, like, there's a lot of hopium that you could start instilling. Like, for example, yeah, we're chopping around the 200, below it, still holding a prior all-time high. If we look at, like, momentum oscillators, shit, I mean, how many times, if this is the entire Bitcoin history, this is the only other times where we've had similar RSI readings on the weekly have been bottoms. Now, it could remain oversold. This is not a, you know, this is not a magic bullet by any means, but there's a lot to be said about bottom signals recently, but it's going to take time. Like, again, I've always said this will not be a V-shaped bottom. This will be a long, sideways, choppy bottom. And I posted something before, maybe it was like last week, actually, 2 weeks ago, about, maybe it was a week ago. Maybe it was, I can't, honestly, I cannot keep track of the time, guys. It could have been in the last couple of days. Doesn't matter. It's on my Twitter still. About after the merge, us just being choppy. Because what other narrative do we have? We just have, we don't have one. We're risk to equities. So we really require them to bottom too, obviously. I don't think, listen, I can't, I don't go into any, dude, I don't know shit about politics or Putin. I don't act like I do. I've always been really adamant about that. I think so many people fucking LARP like they're some incredible macro trader when they haven't ever expressed any opinions on things that they talk very strongly about now. And I will definitely not be part of that group. I'm like mindful of the macro in a broader sense, but I'm never gonna, like, I have no idea, dude. Don't care, don't know. What happens, and I'll hopefully meet it appropriately. This is like, this gets back to always be prepared. Did I take any trades today? No, I actually didn't. I did not take any trades today. So I woke up this morning and I took a peek at market structure. And again, I just marked out the levels that I would want to possibly get involved. I covered them earlier in the stream. And if we're just sitting in the middle of nowhere, there's no reason for me to get involved. I posted this recently and Dante has said something similar as well. You've heard a lot of people say something similar along these lines. Like, if the trade doesn't jump out at you and you're looking for a trade, you're doing something wrong. Yeah, dude, listen, I totally, it's not that I wouldn't, you know, I don't think of these things at all. Like, yeah, I definitely consider the overarching narrative and I guess emotional states of markets and how they relate to what's taking place in the macro, having tailwinds versus not having tailwinds. But I can't get into like any of the nitty gritty or the details because that's not my place. But yeah, if the setups aren't obvious, then they're not there for me, and there's no setups for me right here. Again, just high time frame wise, I mean, this is a level where it's not a level you want to come back to, but I've shared this setup many times before. Consolidation, breakdown, and reversal. The best case is to hold the top side of that structure. So if we start falling back towards the lows of this little consolidation, I think if you don't have something that, maybe you get something that taps this low. If you don't have an immediate response, like if we do get an immediate response here, if we flush a little bit lower and we get an immediate response and then we're trading back above, you know, this little consolidation, then you're probably looking at some more upside. But if we start just drifting into this structure, drifting lower, it just makes sense that you probably take out these lows leading up. There's not a whole lot that stands in the way, right? This market is very reflexive. It's very technical. Oh shit, it's happening right now, is it? Oof. Just tapped the all right. Apologies for 1 second. I'm just taking a peek at this. That was a very quick flush down that didn't result in anything. Let's get over there for a sec. But look at that seller just trapped at the low. $4.2 at the bottom of that. So it looks like a little stop run. But still, not, like I'm looking at 20K. I'm not going to sell before that, even if we had a violent move like that. But I do think that this little consolidation, I mean, if you look at it now, it's kind of shaping up to give that impression. This being that alert that I have, if we're pushing this low, I mean, you're probably going to get overextension, but I think we're at least looking at a little move between there and there, between this low and these lows. Quick scalp. Again, like that's just the first level that I'm thinking, this low being tapped, but odds are you get overextension. So it's on you if you want to just take profit right at the next obvious point, or give this thing maybe a second or two to see if it expands lower than that. And this is definitely a case where I would, let's say we have that expansion between, hold on. Let's say we get that expansion. This is ETH. That's why I'm getting confused. What the fuck is the Bitcoin one? Oh, here it is. No, come on. All right, wait 1 sec. This is bothering me. All right. Let's say we get an expansion below here. Fuck, my drawing tool's all fucked up now. I would probably expect this to move lower, and I would honestly not look to take profit right at that low. This is just what I think exists, though, that you can kind of take for granted. This little gap. So meaning below here, almost guaranteed that. Getting it, maybe? I don't know. We'll see. Any other questions, guys? Otherwise, I'll probably wrap it up. There's no major, I haven't peeked at it during the stream, but there's nothing major. I have it off stream. No major signs of absorption on either side of this. It just looks like we have a choppy market in this little range, meaning there's no signs of like, you know, sellers overly committing at the lows and clearly getting absorbed. There's a little of that at the high, but nothing that helps us lean on one side over the other before anything happens in terms of price. All right, guys, I'm going to wrap it up. No trades during the stream because we never got to the levels. But thank you guys for tuning in. Please hit the like button. Please hit the subscribe button. And we will be live again. Guess what? Tomorrow. Tomorrow, live again at, this will be at probably the same time. I'll post it later this evening. It's either going to be same time or 2 hours after. So it'll be, it would start a half an hour from now. But I will see you guys tomorrow. Peace.